next year inflation will go down significantly unless totally walang available na rice, totally yun yung mga which is our impossible condition. So
In this video, we will talk about what is happening in the Philippine economy. And as an investor, what should you do? Are we better off now or it's still not looking good? To answer that question, we have a very special guest. He's not a stranger in this channel. He's one of the brilliant minds in economics in the Philippines. He is the chair of the Department of Economics in Ateneo de Manila. None other than Dr. Alvin Ang. Hello, Doc.
good afternoon, Neil, and to all the viewers of Stock Smarts.
So, Doc, I just have questions so that for
Hmm.
people who are watching this video, we can learn from you. And I'm excited to learn from you. Doc, we know, nagkaroon ng pandemic. We had a pandemic and somehow we are moving on from it. So in terms of our economy, are we better off now? Is our economy back to the pre-pandemic levels?
The economy has moved more than the pre-pandemic levels. We have overtaken that level already. But it doesn't mean that it is better because without the pandemic, we could have gotten more, right? The level could have been higher because while it is higher now, it's simply retracting back its old growth path. No? So we are in Tagaytay instead of being in Baguio. That's the difference that I'm trying to tell people. No? It's because we lost about 20% of potential.
But at least a good thing with that is we're getting better. And what do you think, Doc, caused the economy for us to recover?
It's really the reopening, no? Because it's like closing a faucet. When you close it, nothing comes out. Now when you open it, everything just comes out. So that's what really happened. So everything has gone better initially. But of course, once everything becomes normal, the previous growth path, the patterns, etc., then you start to experience the slowdown again because now you experience those that are really growing and those that are not growing, they will be separated. And that's what we are experiencing right now. The normal contributors to growth are contributing. And
Right.
then the others, they have gone back to the normal contribution. Of course, we had the cycle of what is known as revenge spending. That is gone. That's finished because like everybody wants to just spend and relax, enjoy. So now the regular growing sectors are the ones that are growing again. The sustainability are those in those sectors only, not for all.
What are those sectors that have been growing and contributing to the economy?
Mainly, you can observe them in the form of consumer-related activities. No? For instance, finance. No? Actually, that is a sector that's shielded from cycles. No? So, continuously growing. We have the sector of other services such as accommodations, tourism. They are growing, but of course, not as you wanted them. No? They are contributing to growth, and we have transitioned basically to a service economy. The contribution now of services is almost about 65 to 70 na. So our production sector like manufacturing, agriculture, they have really shrinked.
Because of the pandemic, there were sectors that have really grown, but there are also sectors that have been affected. Sad to say. Speaking of, if you are an investor, Doc, or at least the people who are watching the channel, if they are an investor, what are the sectors that they can be optimistic in terms of they will invest their funds, and what are the sectors or areas where they need to be cautious?
If you look at the current conditions, we are tied up with the global, di ba? It's the global environment is quite challenging, primarily because of course, the conflict in Middle East, still conflict in Ukraine. They can affect the commodity prices, oil, excuse me, and agricultural products. No? So I think we have to take a look at impact of El Nino and climate, very pronounced, very pronounced early on, affecting inflation, particularly food. But then there are businesses that are able to hedge against this. For instance, if you look at those listed in the stock market and those industries that are not shielded, but I can say they are relatively, if they plan very well, can take advantage of this. This is, for example, yung mga real estate that are imaginative. No, you did not put it only all in commercial. You have a mix because the demand is changing as well. So if you have a good mix, then you lose one, you gain in another. You also have to look at some consumer goods. Since everything is getting expensive, it's getting expensive to cook at home, di ba?
Right.
It looks expensive, more expensive to cook at home. So the fast food, they will play an important role in addressing consumer issues on inflation. Kaya if you look at listed companies on fast food, their prices have gone up on their menu prices, but people still go there. Defensive, as they call it, defensive sectors, because people will eat. And if
That's right.
everything is expensive, they will try to facilitate eating. No? Our friends from a particular securities company with whom we have tie up here in Ateneo, they have recommended also some stocks that will take advantage of the El Nino, because the hot waters will generate certain agriculture and fishery advantages. No? So, for example, for tuna, that's very good. Warm water is good for tuna. So that means certain companies related with fishing, they will earn, something like that. This is something na you cannot just pinpoint one or other. No, I don't want to give specific companies, but take a look at the context. They're closely linked with the environment, global and local. Diba? So yeah, and it will be good also to take a look. 2024 is 1 year before the midterm elections. No? In the Philippines, elections are generate a lot of economic activities. For example, the stock market's really low. No, it is in one of their lowest levels, in a decade or even more. But if you look on the other hand naman, kasi if you go for the equities, mga industries na nasa equities, mura, but then when do you get back the returns? No? So that question of timing. Yung other side niyan, if you can take a look at the fixed income side, no? Ayan, no? So this is actually a good time for the fixed income because everything is giving good returns. The bonds are giving good returns. No? Corporate bonds are also the rates that they are giving. No? So that's good. Of course, if you look at the bonds, it has to do with will the BSP remain hawkish or they become dovish? Looks like they all looking at the United States. So the US is neither here, neither there. So that affects us as well.
Thank you for giving a picture wherein there are really winners and losers. So it's really up to you as an investor to do your research on where do you think money will flow, and take note the tips that Dr. Alvin gave, especially election is coming, economic activity will be there, we know that. And then just like what Dr. Alvin said, in terms of inflation, Doc, just want to share, we are regularly eating a sandwich in a certain place, and then we are familiar with the size. And then just like today, the roasted chicken pesto lumiit, it became smaller. So what they're doing, instead of increasing the price, at least for this timeline, they just shrink the sandwich, the effects of inflation. Speaking of inflation, Doc, I know the reason why the government is increasing interest rates is to curb inflation. And you said because the interests are high, it's a good time to invest in bonds. So is it a good time to invest in bonds? How long do you think the investing in bonds will be a good time for the investors now?
Kasi mostly, we don't have a very actively traded bond market. So most people, when they put money in bonds, yun na yun. They will wait for maturity. So okay yun because, for example, you bought it at 7%. until maturity, 7% yan,
Yeah.
no? Consistently
Constant.
7. Yung market, you have to take a look at it. No? So right now, that's why if there are bond offerings, I recommend that you take them. Unless you know that you can beat them consistently. No? But
Yeah.
since you have a very sluggish stocks, and many corporates are issuing bonds now too. So that would be a good segue for investing.
So it's a good opportunity to take advantage of the high interest in the fixed income assets, bonds. Because if you lock in, yun na yun, locked in na.
Yeah.
Virtually, it's risk-free because, let's say, government bonds, yung guarantor is the country and you will see at least our country, it will not go bankrupt relatively. At least in our country, in our state. And speaking of at least good opportunities, we know that yes, there's high interest rates, but also in our economy happening now, the OFW remittances are still high. Doc, it's also contributing to our economy. How long do you see the trend or the trajectory of the OFW remittances will remain high or at least in an upward swing?
The question of the OFW remittance is, ano na yan constant na, no? It's constantly growing at 3% every year. That's the normal growth path. So I don't think it will change significantly unless we change our policies na, like for example, okay, free for all. Everybody can go wherever they want. No limitations, right? And countries open. We're opening our borders. You can get all our people. But that's not the case naman, no? May have regulations and the like. So at the rate we are doing it, yeah, 3% every year, which is still substantial. So 35 billion times 1.03, how many, and then every year you grow that. That's the amount of remittances you get every year. And then, of course, the reverse part of that is the BPO, which is also contributing about half of the OFW remittances. So roughly, you are taking about 60 billion from these two sectors alone, $60 billion. That's already about two-thirds of exports. So they go direct to the consumers. Yun yung difference. No? The exporters will process it pa, invest it, but this one, direct money to the people. That's why I'm saying finish na yung revenge spending because consumption has weakened, which is also because of inflation. People find many things expensive. Surprisingly, the last 3 quarters, the sectors that weakened the most in consumption is clothing. It's not even food, no? If you take a look, it is actually miscellaneous consumption.
Mga
Miscellaneous
add to cart,
consumption.
Doc, mga add to cart.
Parang ganyan, no? Yung ganyan lang. Hindi siya yung, it's not really very conscious na consumption. Tsaka miscellaneous consumption also includes yung personal care. And unfortunately, they are not in funds and they're not in stock market. They are SMEs, direct investments of people.
Doc, you mentioned earlier, I just like to go back to the remittances of the OFW for the BPO. Can you give us just like at least for context in terms of what happened to the remittances during the pandemic? Because I know globally people lost jobs abroad. Did it affect our remittances?
In terms of the remittance, there was really no significant decline, no, surprisingly. We thought it was going to decline. Apparently, the reason for that is there was a problem of initially people were not using apps, no, financial flexibility, fintech, and the pandemic made the OFWs learn fintech, so they were sending money even if the economy where they are is not good. So, but they kept on sending money. Actually, we were those who predicted it wrong. We thought remittances will go down because people will not send money. But in the Philippines, all the time, counter-cyclically, the OFW send more money during crisis.
Yeah. Siguro someone in their family message, ate, please send money. Because syempre, it's crisis eh. And our OFWs, they really love their families in the Philippines. Tulong-tulong. And because of that, right, in terms of the finances sent by OFWs, and I remember, speaking of like mga dollars and all, at least for now, the peso is stronger than last year. Because last year, Doc, the peso weakened, and I remember it was around like 59, 58. And in terms of the dollar now, do you think this year or in this timeline, will it consolidate or stabilize in this range? Or are there sudden spikes that we can anticipate in the future in terms of the value of dollar and peso?
I think the peso actually will get stronger in the next year, no? So from 55, siguro it will settle around 54 average next year. Our deficit, no, trade deficit has been narrowing. So we're not buying imported so much. This has to do also with our global value chain with China and the rest of the world where it has weakened. So our import is about 50% is because of our importing components that we will use for exports. We are not importing that much. So that's good. It also helps the trade, no? Our exporters contribute more. Okay, so those are the things that no that I'm seeing na will affect us in the next peso dollar rate. No, so it's that's why it's not going to depreciate so much. Of course, the banky wrench here is if the US suddenly increase interest rates again, because that puts pressure on the dollars invested in the Philippines to go back to the US or to go to where yield is higher, unless the central bank will increase interest rates again. So, but then you're not addressing inflation anymore. You're addressing the movement of the exchange rate. We are bound to do that. Kaya that's why you saw that also last year. No? Interest rates were increasing until early this year because you don't want the dollars that were invested here to go out, because if they will get value higher out in back in the US, they will move there, right?
Yeah, yeah.
Yan, yun ang naging problem natin doon.
Like especially if you're in the Philippine government to monitor what's happening in the US in terms of interest rates, because if we will not follow or at least their interest rates, lilipat yung mga investors and we don't want that. And Doc, we just really learned a lot. Any final words, insights, words of wisdom that you can give to our investors watching or maybe wanting to go into investments?
2024 would be a mix for the Philippine economy. No? We will grow, definitely. Minimum of 5.5%. We can do that. Even 6 kaya. Even 6.5 kaya. The question is, like what I'm saying, there are winners and losers. So who will be the winners who will pull up the economy? And as I shared earlier, Neil, this will be mostly those that are prepared in the global tit for tat. No? So if you look at the real estate sector, okay yan. If the company is not focused on one product alone. No? So yung mga REITs natin, they're actually good, but you have to look at what is the content of the REIT. You also have to look at the renewable energies. No? These are very few companies are listed, very few investment. But you know that if you start a business, you have huge capital. These are down the line your new kids on the block, no renewables. As I said, defensively, you still eat every day. So if prices are high, then you will look for food that are easy to prepare or easy to eat. So that's why it's either fast food or those that are packed, no, yung easily prep, no. As long as they are not, the price is not as high as when you are going to cook them yourself. So, tourism, we have lots of potential. We have not gone back to the pre-COVID level of tourism. We were hitting 9 million already in 2019. We are just now about 4 or 5 million. So you see the potential is still large. And by the way, next year inflation will go down significantly unless totally walang available na rice, totally yun yung mga which is our impossible condition. So our estimate is that inflation will go to close to the BSP target, high of 4 and even low of 3. Kayang-kaya next year yun. So that means that there will be a softer interest rate environment. No? Magkakat yan BSP. Kaya nga, yung I told you earlier about the bonds, if you lock in now, good. Because next year, those will offer lower rates. Because the central bank will lower the borrowing rates. And if you are buying a mortgage, a house, or anything big investment right now, wait until the BSP lower the rates. Don't go now. because you will get a high rate. If you need to reprice, don't reprice now because the repricing is high. Reprice it next year. Because the interest rates have been increasing. I remember during the pandemic, I told people, I think we also talk about that. I told people to go to their banks even if they're not being asked. Ask them, please reprice me now because interest rates are low and lock me 5 years. Right? No, so yung mga nakinig, masaya sila. Yung mga hindi nakinig, sinabi ka, sabi mo na eh. Eh, sinabi ko na sa iyo eh. No? So now I'm telling you, don't lock in anything now because rates will go down. So, antayin mo muna.
Wow. So much wisdom, Dr. Alvin Ang. It's truly an honor to just have you here in this channel, and let's take note all the suggestions of Dr. Alvin in terms of sa repricing sa house, even in terms of sa bonds that there's a forecast that interest rates will go down. So lock it in now. So Dr. Alvin Ang, I know there's so much more that we can talk about, but that's it for now. We are just really in awe of just all the learnings that we get. And if you have any questions, please comment down below. And Dr. Alvin Ang, thank you so much. And it's really an honor. So again, if you have any questions, if you have learned something, comment down below. Like for me, I learned a lot. So if there are questions, we will try to answer that in our next video. And if you want to reach out to Dr. Alvin Ang, pick his brains, his wisdom, his details, you can check in the link, our description, so you know where to follow him in different social media channels. And of course, if you want to learn more about investing, just click the links in the description. So thank you so much, and God bless you.